All right. Good morning, good afternoon, good evening, good day, regardless of where you're going to be viewing this recorded stream. All right. So I remain your humble Javan FX right here on YouTube. So it's another day, it's another week, and today is 16th of the month. So the month is fast approaching to the end. So today I want to share with you guys how to trade trends inside the market structure. All right. A lot of people call um, trends like short-term trends. They even refer to it as structures, right? But I I felt like it is proper for us to use the proper term, right? The proper words for this business, because if we do not use and understand the proper words that we're supposed to use while we are trying to analyze the market, trying to find entry positions like buying long or selling short, buying a short-term downtrend, buying an up, I mean selling a short-term downtrend, buying a short-term uptrend, or buying the up market structure trend or selling the down market structure trend. It will be difficult for us to actually know what we are doing. All right. So that's why I decided to share it with you guys. So we need to know the proper words. In my own personal humble opinion, all right, I've been around the block just a few times, so I have actually personally watched some few videos for myself on YouTube, and I hear people, you know, say structure over time, and it gets me confused. Like, what is structure? What is market structure? What is short-term trends? All right, so there's a difference between market structure and there's a difference between short-term trends. If you watch my videos on YouTube, on my live, if you go on that live, you're going to see live. One of those videos I talked about it and what is the difference between market structure and short-term trends. All right, short-term trends. I'll just quickly rephrase that again. All right, short-term trends are what build market structure. And my very first video right here on YouTube, I explained that the market, okay, moves in between the bands, right? We have a monthly support area, monthly resistant area. The market tried to go down but rejected, did not get to the monthly support band, went up to monthly resistant band area, so expecting this area as a resistance. All right, so at this point in time, in my own personal humble opinion, all right guys, I believe the market from this area is going to go down to the monthly support band, which it actually did. As you can see, price pull all the way from this monthly resistant band area all the way down to support band area. So long term, I'll be expecting price to do whatever it wants to do, then eventually pull all the way to this level to respect this resistant band area, in my own humble opinion. So this is what I'm expecting long term. Right now, once market gets to monthly bands area, right, because this is the level where these two countries, all right, England, Britain, whatever, and the Japan country, because forex that we are trading online, okay, buying and selling digital currency online, okay, we are joining hands with these two countries, okay, because these two countries have an agreement of trade, export and import, right? Whatever they are exporting and trading within themselves, right? So they agree to keep their trade balance agreement between the bonds, okay, the bonds rather. Let me bands, yes, bands. All right, bands. So this is what they do. Okay, they keep price between the bands. So we have the resistance band here, and we also have the support band. Okay, so they keep their trade agreement between the bands. Okay, so this is the monthly time frame, because everything starts from the monthly time frame. So long term, once price comes down to the monthly support band area, okay, it's an area. That is the reason why I use this box and extend it so it can accept a lot of touches of candles. So if you watch my first video, I talk about how to build the monthly support and resistance bands area. All right, so long term, okay, the long term view right now is going to be that price is going to go all the way to the upside from here to this level, right? That is the long-term view. Now that's one word we want to take to heart. The long-term view from the monthly time frame standpoint of view, based on the monthly support band, this market is going to go up long term. That is the long-term view on the monthly time frame on GBP JPY. All right, now inside this monthly chart, we have, before the market is going to build the market structure, it is going to build the short-term trend. All right, everything all starts with a short-term trend. I'm talking about something like this. The market is going to start making higher highs, higher lows, higher highs, higher lows, higher highs. Along the line, it's going to consolidate. Sometimes, it's going to consolidate for how long, who knows, breakout, come back and retest, and it's going to continue. Then later, we're going to see, it's going to start making lower lows right here. All right, lower lows, lower high, lower lows, lower highs. Sometimes then it's going to retrace again, start making higher highs, higher lows, higher highs, higher lows, higher highs. So it can do a lot of stuff. All right, now this is the short-term trend, this one. So back in time, we have for example, okay, we have the, excuse me, this is not meant to break that level. Sometimes it can, yeah, like this, it's not going to break. All right, let's stay like this. So right now we have the short-term trend, and the short-term trend also back in time like this have its own trend line. Like this trend line here, this blue trend line was confirming that uptrend, and later we have a downtrend line too, and this downtrend line was confirming this downtrend, and again we have another uptrend line. So we have all of this. So this is how the market work that I have personally seen. All right, so this is how the market starts the trend initially. This is the way it starts. First of all, we have the first uptrend, we have the downtrend, we have another uptrend. Now once the market is doing stuff like this, automatically it's building an up market structure. Once we have accomplished this level in this manner, once the market make this new high like this, breaking this high here, in my own humble opinion, it has established market structure, up market structure. So we have extension, or in another word we can call it impulse. Then we have retracement. In another word we can call it correction. Then we have the next impulse leg right here, which is the next extension. All right, so this orange line right now is serving as the market structure trend. Now in order for us not to start drawing trend lines all over the place, we can easily take or leave this trend line and adjust this trend line. Okay, so this becomes up market structure trend. All right, this become up market structure trend, and when we are drawing those trend lines, we must try to make sure we don't break body candles or body wicks. All right, we don't break any of that. So now this is what I call up market structure trend. The trend line here is confirming this orange line. Okay, that is the up market structure. This trend line here is confirming it, and this second trend line is confirming this short-term uptrend that we have right here. And on the other hand, this downtrend becomes a retracement. Now what I want to talk about today briefly, I'm not going to spend much time, is how to trade this trend. All right, so it could be down market structure trend. All right, this one is up market structure trend, right? No, it could be in reverse, it could be down market structure trend. Then we're going to talk about how we can trade the short-term uptrend inside the down market structure. But in this scenario, we are going to talk about how to trade this short-term downtrend right here inside this up market structure. All right, so that is what we are going to be looking at today in my video. All right, guys, so this market back in time, like I said, all right, so for example, it has its own trend line right here. And in one of my previous videos, I talk about how to properly draw trend lines, and we have different trend lines in different time frames. Okay, and 3 trend lines. We have the long trend line. For example, this is going to be serving as a long trend line based on the up market structure. We also have medium trend line. This is going to be serving as the medium trend line. We also have the small trend line and the aggressive trend line. So in this scenario here right now, back in time, we have this trend line, okay, for this uptrend. So we also have this second trend line, okay, all the way to this level. So we didn't have much to put. Okay, so this was what we have, for example, back in time. And the market was making higher highs, higher lows, higher highs right here. We can clearly see that it's not a big deal. So let's just make it quick. Higher highs, higher lows, higher highs. Then the market made a lower low at this area here. All right, so once the market make this lower low here, okay, breaking this low, this higher low at this level, what does that mean? It means that we are no longer in this uptrend that we are seeing. All right, it's no longer valid, because right now the market just made a lower low right here. Okay, then it started making lower highs, lower lows, lower highs, lower lows, lower high, lower lows, all the way, and it made a higher high right here again, terminating this lower high. It changed the trend. So anytime you see markets, okay, changing from a previous trend to another trend, you want to watch out for a relevant, for example, we want to watch out for a relevant previous higher low in this scenario. Okay, for example, you want to watch out that the market broke it nicely. So we have a high, we have a low, we have a high, then we have a lower low. Once that happens, you want to be looking for a sell at that particular time, and it can happen on all time frames. Scenarios like this can happen on all time frames, but it is more effective 7 times out of 10. It is more effective on the higher time frame, such as kind of 1 hour, 4 hours, then monthly, daily, weekly, including the monthly. Once you see this kind of scenario play out, you don't want to go against it. You want to just follow the trend. And if you are an aggressive trader, if you see this kind of scenario on the daily, you want to go to the smaller time frame to look for entry to short the market immediately. And the best place to sell the market immediately, for example, as an aggressive trader that you are, is this area. So you're going to wait for the market to do what? You're going to wait for the market to, let me change this color to green, or better. So you're going to wait for this counter trend line. So we also have what is called counter trend line. Many of you advanced trader already know what that is. But as a beginner trader, if you are new, please, you want to check my videos, all right, and see where I talk about how to use a counter trend line. All right, so this counter trend line, once the market broke this counter trend line with body candle closing below that counter trend line, a bearish candle, you want to sell the market. All right, you want to sell the market at that level. All right, and stop loss must go above here. Don't put your stop loss here. If you put your stop loss here, Believe me, the market can just go down a little bit and it can go up again, take you out, go a little bit higher, and it's going to fall and you are going to miss, especially once you are not there to monitor the trades. All right, so don't do a short stop loss. 7 times out of 10, short stop loss does not work, in my own personal humble opinion. All right, so how you trade this kind of trend is very easy to understand. You can see it on all time frame and you can easily take advantage of it. All right, and once the market changed the trend again, as you can see, it was a lower lows, lower high, lower lows, then higher high right here, taking out this higher low. This is where you buy the market again. Counter trend line break here. You want to, once the market break the counter trend line with bearish candle at this level, you want to look for an entry. Stop loss goes to the previous pattern traded, not this one, but this one. All right, so this is what I want us to look at right there in the chart, and we're just going to dive into the chart right away. So let me quickly take out all of these drawings and we'll go right into the chart. All right, okay. All right, let's get back to the chart. So this is the monthly chart, right? So for what I was explaining, you guys can see right here, this is the monthly time frame. All right, so we have the market on the monthly time frame right here. It was coming all the way down. It made a lower low here, it made a lower high here. This is the high. Then it went down to make a new lower low right here. Then the market started making higher highs, higher lows, higher highs, higher lows, higher high. So once this market here took out this high, it was a game changer on the smaller time frame. Yeah, once the market went up here, take out this high. So this was the previous lower high. Then we have a lower low here, right? This was a lower low. Okay, this is a low, all right, but it is not a low compared to this low. So this one is lower than this one. So that is the reason why, instead of me to say lower lows, lower high, and lower low, this is not a lower low. Okay, this is not a lower low. So this is the relevant lower low that was lower than this, and the market went all the way. It made a higher high here, higher low, all right, and it went up and made a higher high that was higher than this high, and that's why we got that buy all the way, price push all the way to the upside. So if you notice this kind of scenario on the smaller time frame or from the higher time frame and you go all the way to the smaller time frame, believe me, you are going to make money in this market, and it is that very easy. All you just need to do is wait to see a change in the short-term trend from the previous short-term trend. All right, wait for the current market to change the previous short-term trend. Now the previous short-term trend could be that price is coming from up to the downside, which is going to be a lower high before the market change the trend. Like for example, this is still GBP JPY back in time. All right, so we have the market here. This is the up market structure. So we have the market, this is on the monthly band area. So the market was making, all right, the market was making extension. This is a retracement here. We have extension. I can't see this properly. This is a retracement. So we have a retracement here. We have extension. This is not a retracement. Let me look at it very well. So like I said, we have a retracement here. All right, a retracement for any beginner trader or analyst that is going to be watching this video. A retracement is where you see market making higher highs, higher lows, higher highs, higher lows, or lower lows, lower high, lower lows, lower high. In this scenario, we have the extension market structure right now. You can see here extension. This is a retracement. We have extension. This is a retracement. So previously the market was making higher highs, like I said earlier. So the market was making higher highs here, it started making higher lows and higher high right here. All right, and then the market did what? It changed that trend right here. We can see this was the higher low, this was the previous higher low right here. All right, this one, and the market did what? The market changed that trend by making lower lows. So this market here terminated this higher low, so automatically this is where you start selling the market on the smaller time frame. So like I said in that example I showed to you guys, this was the counter trend line break right here. So this was a counter trend line break here. It was a straight line, not that beautiful counter trend line. All right, it was a straight line, but this was the break of the trend line. This red candle here, this red candle break this trend line, counter trend line, and went up a little bit and started falling to the downside. So if you, it's not a good example that much, right? This is not a beautiful example, right? So we're going to look for a better one, right? But then if you are the kind of person that like to wait for retracements to happen, all right, this is what you're going to do. When the market make that lower low, after a low comes a high, right? So you're just going to be patient for 3 days, 1, 2, 3, bam. Then you put a counter trend line on the smaller time frame and you find a beautiful entry, all right, on the smaller time frame. Counter trend line break on the smaller time frame, you sell. This was a bearish engulfing candlestick formation, and you would have made profit from here, 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 all the way to this level, and you get out of the trade. And it's that simple. Yes, it is that very, very simple. Only when you learn in the correct way, understand how this market works in the correct way, then that will be very easy for you to, take advantage of the market instead of the market taking advantage of you. And now you can see the market was making lower lows here, lower highs, and lower lows here, lower highs and lower lows. So like I said, what I want to talk about is how you can make money trading the trend inside the market structure. All right, so we have the uptrend, we have the yellow line is the market structure. All right guys, then this black line is the short-term trend, and this one is the short-term uptrend. We have the short-term downtrend. Okay, and each of them, if I wanted to put a trend line, all right, I will also put another trend line like this. Okay, back in time, how the market started, making its move. All right, but since this scenario has already passed, I'm just going to take out the trend lines and let go. And that's why you can see I already have my trend line, because I keep adjusting the trend line. Once the market keep going up, I keep adjusting the trend line, adjusting the trend line, adjusting the trend line. All right, so right here you can see the market here also did there was no retracement here. Okay, there was no retracement here back in time. Okay, no lower lows, lower high, lower lows, lower high here. All right guys, if you look at this very well, let's take a very close look at this. So this is the low, but this is not a low, but this is a low. So this candle is lower than this candle. All right, so we cannot refer to this as a low. All right guys, so if you want to know what highs and lows means, how to identify relevant highs and lows, please check on my live section of YouTube. You're going to see where I talk about highs and lows. And the market went all the way, so this is going to be so extension. So this is not the retracement, so I'm not going to leave this here. I'm going to extend it all the way. Okay, so this is the extension and this is a retracement. You can see the market made lower lows here, lower high and lower low. So this is a retracement, but I might extend this again. Why? Back in time we have this one. Okay, we have this low here that is lower than this low. Now why am I doing this is because we can already see that all this move they have already passed. So instead of me using this as a retracement, okay, it's not necessary anymore because we have market pushing all the way to the upside right here. So we are just going to extend. But back in time, it was important. So back in time, we have so if I leave this like this, for example, okay, so we have the market here making lower lows, lower high, lower lows, and we have a lower low here, lower high here, we have a lower low here, we have a lower high here, then we have this lower low. All right, so once this market here took out this low here, it means market structure, like the up market structure, has been taken out. All right, this, you see, so at this point in time we are no longer in this up market structure anymore. Yes, this up market structure, right? Because this low have taken out this low. But as we can see right now, it has changed. All right, so instead of just staying at this level, okay, this is now the relevant high. All right, and this is where the retracement happened. All right, so this becomes the retracement low. Okay, up market structure retracement low still continues, and we have another extension, we have another retracement. This is not a retracement because we need a retracement high, talking about market structure. Okay, so we need a high that is higher than this. All right, and these highs are not higher than this high, so we're going to extend all the way to the upside extension. We have a retracement, lower lows, lower high, lower lows, right here. Then we have another extension. So let's just hold on a little bit for a while. Now I'm talking of how can we trade the short-term trend inside the up market structure or down market structure. So back in times, this was the short-term uptrend. All right, we have the short-term uptrend here. The market from here, the market was making higher highs, higher low, higher high here, higher low here, higher high. All right, I'm going to change that to this color. So this was a short-term uptrend. All right, this purple line. Okay, now this is still the daily. How we would have taken advantage of this market would have been lower lows, lower high, and lower low. So this market here took out this. You can see that. So this is where you and I on the smaller time frame, okay, would have made tons of money from this market on the smaller time frame. Okay, so I broke this candle. I'm trying to look which of these candle is a high because we have to go by the move. All right, so this is the highest candle, so that is the reason why I did this like this. So we are not meant to break body candles once we are drawing that. All right, so as you can see, once this candle, bearish candle, closed below this counter trend line on the daily, look at the beautiful move. If you would have short this market back in time, right from here, even from the daily, so stop loss is going to go to this area above the, all right, above here. So this is where you put the stop loss, and then you can risk whatever you want to risk. All right, you can risk 1 for 2 if you want. You can risk whatever you want to risk, and if you have risk 1 for 2, this is the profit target for 1 for 2 all the way to this level. You can see how the market hit profit target. All right, so it's that easy once you learn in the correct way. Okay, and if you'd have traded it on the smaller time frame, that would have been a very much huge profit for you back in time. All right, just because the short-term trend changed at this level, and once the market did not make a new high, okay, the market did not break this high. All right, it came to this level and started falling down because the trend has shifted from up to a down side once the market made a new lower low right here. All right, guys, so this is what I want to share with you guys, that you can trade the market, you can analyze the market, and you can make pips for yourself. All right, and again we can see here too, the market was making the lower low, the beautiful lower low here, right? Lower lows right here, and lower lows, lower high here, lower lows here, and you can see the market at this point in time. This example is not that beautiful, okay, because the market started making higher high here, higher high, did not take out this high yet. It made a new lower low again at this level, then it started making, it made the lower low again here, then it started making higher highs, higher low, and from this movement all the way up right here, the market terminated this high. So this wouldn't have been a beautiful example for you, but you can see that the market moved in a sideways. Yeah, at this point the market moved in a sideways, so it's an area. Okay, so this is the market. Let's take out the extension. All right, so this back in time was a consolidation. Okay, so if you don't understand how to trade this back in time, when a market, you can see a market movement in this manner, you want to stay away from it. Why? Because you don't understand how to go about it. If you know how to trade consolidation, fine. If you don't know how, stay out. All right, so the market moved sideways. Then once the market successfully break out from here, this was a very beautiful buy for those who know how to, you know, buy the market. And one other thing is the market was also in an uptrend, market structure, up market structure, right? So this yellow line was still in place for the up market structure. Once this high, this short-term trend high was taken out here, okay, if we can see, this was the high, this candle here took out this high here. All right, and probably as a smart analyst and trader that you are, once this market closed like this for the day, you do what? You buy the market and make money on the smaller time frame. So all of these 1, 2, 3, 4, 5, 6, 7 days, you would have make all of these profits, even inside the market up market structure trend. And once the market make a new high at this level, once the market makes a new high at this level, we have the up market structure still in play. All right, so instead of the market changing the market structure, because the market actually did change the up market structure back in time right here, but it did not stand. The market went up, consolidated, and went up and make a new high, up market structure high that is higher than this high. So which simply means that the up market structure is still very, very much in play. All right, still very much valid. So this is how you trade up market structure trend, or if it's the other way around, down market structure, you want to look at the short-term trend. All right, you want to look at the change in the short-term trend, just like I showed to you that example. And you can do this on all currency pairs. It doesn't matter the currency pairs. I don't know if it works on gold. I don't know if it works on indices. I don't know if it works on cryptos, but for Forex, yes, it works absolutely well. All right, guys, so this is just what I want to share with you guys. Hope you enjoyed. If you enjoyed, please share with your friends, and please, you can leave a comment for me. All right, I will appreciate, so I can know how to better, you know, bring something to you guys that you guys are going to like, love so much, and benefit from. All right, guys, so this is all for you. Also, please subscribe to my channel so that once I drop more of my content, you can get to see them quickly, watch them, and learn from them. All right, guys, it's very, very appreciating for me to always know that you guys are watching my video and subscribing to my channel. I really want to appreciate you guys so much. Thank you so much. All right, you guys want to stay tuned for my next video, and for now I'm just gonna say bye bye until next time.